Hey everyone, me Kevin here. In this video, I'm going to talk about a very cheap $8 stock that could 5x in value pretty quickly. That means it could go to $40 per share relatively quickly, or it'll go bankrupt. So if I'm wrong, don't sue me, bro. And if I'm right, well then subscribe and stay tuned for the future videos. So quick heads up, I do want to just say I did also tell all of my stock and money course members about this stock yesterday when I first bought the stock. And unfortunately today, the stock's already bumped 10% in price, but that's, in my opinion, relatively small compared to what I think this company could do in the future. So I don't really care about the 10%. I'm not trying to come across as like, yay, pump and dump. I have no intentions of selling this company, so I just want to make this very clear. I bought it, I plan to buy more, and I have no plans to sell it. And remember, you can always use that Black Friday month coupon code to join me in those courses like Stocks and Money, where I also talk in live streams about my investment decisions and new stocks that I look for every day the market is open. You only pay once, and you could use that Black Friday coupon code linked down below, or email me for a bundle coupon code at kevin@mekevin.com. All right. On to the company. The company's name is Shift. It is a used car selling company that is gearing up to give Carvana a run for their money. Carvana, Shift, and Vroom are the top 3 e-commerce-based used car sellers right now. And right now, used car sales that are taking place mostly online, or at least start online, only make up 0.9% of the industry. But industry experts and even companies like Vroom are expecting that we could see in the next 10 years, e-commerce-based used car transactions explode to 30 to 50% of the market. That's huge. That's 30 to 50x where we are now. And this sets Shift up to be a potentially massive growth company as long as it can claw market share. The company trades under the ticker symbol SFT. And its legal name is Shift Technologies, Inc. It's an $8 stock, and the company has a market cap of barely over $600 million, which is honestly a teeny little company, which does come with risk. When you're buying these really cheap, tiny companies, you could go big or you just lose everything. Sometimes it feels like roulette, except I feel like the odds are 80% that we're gonna go, in the black here and not in the red, which is good. We want that. Or in the case of the correct coloring, in the green. So the company listed onto the stock market through a SPAC a couple of months ago, blank check company, and its stock has been a bit volatile following a miss on Q3 earnings expectations. The Q3 earnings call, which I listened to every word of it, let me just say it was a little bit of a mess. The executives were stepping over each other, and I honestly kind of think it was, in fairness, it was their first earnings call, but I kind of feel like they didn't know what they were doing on the earnings call. The analysts are like, no, this is what I mean. And they answer, and they're like, no, that's not really what I meant. What I meant is this. It's a mess. So the company isn't good at giving guidance yet. It's a money-losing company. The executives aren't really sure how to deal with analysts yet. And honestly, I'm not even really sure why you're watching this video. I mean, Carvana has car vending machines. Why would you bother with Shift when you could buy the overpriced Carvana stock? Well, there's why. See, Shift is special, and we're going to talk about the valuation differences here in a moment, but Shift is kind of unique. I mean, first of all, it sources cars locally, and it sells them in the region they work in. Shift really only works in about 5 regions. If you download the Shift app, you'll see they've got 11 or 12 locations listed, but they're really only in 5 regions. Los Angeles and Orange County area, NorCal, San Diego, so 3 of them are in California, Washington, and then Oregon. That's it. That's 5 regions right there. They're about to launch in their 6th region in Austin, Texas, but they need people and they need more used cars. They are constrained right now because they're not in that many regions. They don't have enough employees and they don't have enough cars to sell. Carvana, just for comparison, is the biggest online seller of used cars right now, and they sell in 30 regions across America. That's 6x the amount of regions that Shift sells in. But here's the thing. Carvana currently sells for 4.6 times its estimated $8 billion revenue in 2021. Vroom sells for 2.3 times its estimated 2021 revenue. Shift, on the market right now, sells for just 1.3 times its 2021 estimated revenue. Maybe that's because people don't believe Shift, which is entirely possible. Again, they could go bankrupt, so don't sue me, bro. Like, don't go all in on this. Like, don't sell all your Tesla stock to YOLO on Shift, okay? Shift is a baby. It is the smallest of the bunch. It is up there with the top three players here, but it's tiny. It's an immature little baby, and basically, the only reason I kind of like the stock is because people seem to like this baby. Actually, there's more to it. I like the valuation, and people like this baby. Let's talk about that. See, Trustpilot ranks Shift at a 4.1 star rating out of 5, with 20% of customers having a bad experience. That is actually substantially better than Carvana, which ranks at just a 3.5 star rating, with 22% of customers having a bad experience, and it literally blows Vroom out of the water. Vroom is rated at a 1.4 star rating, with 80% of their customers having a bad used car buying experience. And these ratings are consistent across Yelp as well. People seem to really like Shift. In fact, I was chatting in our stock group yesterday, in our Discord stock group, with a course member who works at Tesla. And when people come to Tesla to buy a car, he actually recommends that they sell their old car to companies like Shift or Carvana and just price match them and see which one gives them a better deal. But before we talk about more of that, let me just quickly get this out of the way. Shift has centralized customer service. They handle all their sales locally, and they source all their cars locally, but they do have a centralized customer service department to really ensure they've got a consistent customer service message. In their opinion, this also leads to fewer days to turn around a car, which is good because inventory on the shelf is basically money out of the coffers of a business. And in terms of website traffic growth, Carvana's traffic in the last 3 months grew at 32%, which is really, really good. Shift only grew at 11%, but Shift grew almost twice of what Vroom grew. Vroom only grew at 6%. And remember, even though Carvana's website growth is around 3x what Shift is doing, it's selling for 4 times as much money on future earnings, and it's servicing 6 times as many different areas. Shift is, we mentioned this a little bit earlier, but, because they're a little baby, they've also got growing pains they got to go through. They got to attract more talent. They got to attract more salespeople. So they got some work ahead of them. All right. So now we've gotten so much of the background out. We get it. They sell cars. They're a baby company. But Kevin, okay, they're cheap. They're cheap relative to Carvana. Why the hell, though, would we buy Shift instead of Carvana? Why would you buy the loser of the bunch, the runt of the litter? Why? They're the newest, and they're the runt. They're the baby. They're going to get bullied and destroyed by the big guys. Why doesn't CarMax just come in and absorb them up and screw them? Well, here's why. See, used car sales is really interesting because let me give you the opposite. Okay, let's put used car sales on the shelf for a moment. Let's think about Tesla and Nio. See, think about Tesla. Tesla's an automotive manufacturer, and they benefit from something called winner takes most. That means that Tesla's brand loyalty and the fact that it's years ahead of other EV competitors like Nio in manufacturing and scale means that Tesla might take most or a big chunk of the EV market space. That doesn't mean I don't like Nio. Don't get me wrong. I like Nio. I invest in Nio. And sure, there's always going to be competition, right? There's always going to be another choice. But Tesla has a huge moat or huge insulation against competition because, well, they were first. They've got excellent autopilot, they've got the scale, and all of the scale that they're building and the efficiencies they have in manufacturing allows them to reduce the prices of their cars, making it harder for other competitors who aren't as efficient to profit. This is why Nio, for example, focuses on the higher end, the more expensive SUVs. They're not going to try to race Tesla to the bottom because they can't. They don't have the competition capabilities, at least not yet. So that's how Nio's trying to slice out market share. They're trying to stay away from where Tesla's playing because they know it's hard to compete with Tesla in a winner-take-most environment. So wouldn't the same apply to, taking this back off the shelf, Carvana and Shift? The answer is no. See, Carvana and Shift are in the space of buying people's used cars, fixing them up, and reselling them, basically flipping cars instead of houses. So let me ask you this. If you want to buy a car right now, a new car, you might be interested in buying a Tesla. And if you had already bought a Tesla and you love Tesla, you'd probably want to buy the Cybertruck and the next one, right? But put this hat on for a second, okay? Let's say you got a used Toyota Camry. Who are you going to sell the car to? Carvana? Because, I'm bleeding. Oops. Are you going to sell it to Carvana or are you gonna sell it to Shift? Well, you might be thinking, well, I mean, I know Carvana, so I'll sell to them. Probably not. Instead, you'd probably be thinking, well, dude, come on, Kevin, this is obvious. I'll sell it to whoever the heck is gonna pay me the most money. Where am I gonna get the best deal selling my car? And see, that is a very different kind of market space. It's kind of like Redfin versus Open Door versus Zillow. Hey, I'm gonna shop all three of them. Who's gonna give me the best price? I don't really care. I just want the best price. I mean, customer service is useful as well, so maybe you kick Vroom out, but then you've really got Shift and Carvana. People are at least gonna get 2 quotes, maybe not always, but the odds are they're going to get 2 quotes. So, that creates a very unique opportunity for a small, in my opinion, undervalued company like Shift. See, Shift is spending money like crazy trying to buy market share. This is why their financials, their expenses don't look that great. They're spending a ton of money on advertising. They're trying to build up that brand recognition, and they're not getting enough cars in and employees in to actually push the product. This is a real typical growing pain stage for a baby fledgling company like Shift, which, yeah, creates a lot of real competition for it. But because of the space that Shift is in, yeah, profit margins might compress, but Shift can be a player in a space against Carvana, whether they're tiny or they're big, solely because people want a simple experience and want a price shop. And that means that Shift has a very real shot of competing with Carvana no matter what market they're in. In that kind of case, okay, this is where things get fun. In the event that Shift does end up competing directly with Carvana in all the markets that Carvana is in, what's gonna happen to Shift's valuation? Well, hedge funds come in and they go, wait a minute, why are we paying 4.5 times earnings for 2021 at Carvana? We could be paying 1.3 times earnings over at Shift. And when that happens, people buy Shift, the price of Shift goes up, the multiple, or future earnings multiple that people are paying goes up, and before you know it, you're paying 4x earnings at Shift just like you are at Carvana. Now, Shift isn't as mature yet, we don't have the margins down yet, the efficiencies aren't there yet, so Shift probably won't be profitable until 2023 or 2024, or they'll go bankrupt. But this is a very real stock that could potentially 4 to 5x simply by the market valuing it like its closest competitor, Carvana. And again, things get better with time, things get better with margins and scale, so we can't look at Shift and say, all right, it's gonna 5x tomorrow. This company could literally go down to $4. I'm not gonna sell it though. I'm gonna keep this because I like that competition against Carvana. I want exposure to that used car market, which this pandemic has absolutely blown up. And while I encourage you to do your own research, I'm putting money into this thing. So I do want to clarify as well, why did this stock start going up recently? Well, it started going up recently in part because the executives over at Shift decided to each put $100,000 of their own money into buying the stock back off the market. So they paid market price of about $6.80 to buy this. To me, that was really a symbolic move. 100K from each of them, probably a drop in the bucket for them, right? But it's just a sign of confidence from the executives, or maybe that's what they're trying to make it seem like. But hey, it's working. It got me to look at the company, and I realized yesterday, like, let's actually see what's going on here. Let's listen to the earnings call. Let's do some research. Let's have some conversations about this. And to me, it makes sense to throw some money at this. I could be totally wrong, so certainly I can't make any guarantees. I'm not a financial advisor. I'm not telling you to YOLO your savings into this by any means at all. But let's just put it this way. If this company starts getting picked up the way Carvana got picked up, it's got a good-looking future ahead of it. That's my take. Thanks so much for watching the video. Really appreciate it. And folks, if you liked it, consider sharing it. Check out the courses down below, and we'll see you next time.